I've got a quick dollar update for you today. U.S. advanced quarterly GDP came out this morning better than expected, forecasted at 2.6%, but actually came out at 2.9%. Not only that, but unemployment claims came out better than expected at 186,000, which is 17,000 less than what was predicted. These are two possible reasons for the dollar making some moves today. Taking a look at both the hourly and the 15-minute chart, we can see the dollar has risen so far today. We'll see if it can build on this bullish momentum. So let's go ahead and check out the market heat map. Let's see how all of our assets are trending so far today. Up top, we have our major US dollar pairs first. USD JPY being our biggest mover to the upside so far today, up 0.53% on the day. Euro USD, on the other hand, being our biggest mover to the downside as far as our US dollar pairs go, down 0.23% on the day so far. Taking a look at our major indices, the S&P 500 has made some nice moves to the upside, up 0.43% on the day. The NASDAQ 100, on the other hand, over the last 2 days was our biggest mover to the upside out of all of our assets. So far today has fallen down 0.18% on the day. US oil right here is actually our biggest mover to the upside out of all of our assets. Right here, we can see that it is up 1.19% on the day. And if we want to take a look at gold as well, we can scroll until we find XAU USD. Right down here, second biggest mover to the downside out of all of our assets, down 0.41% on the day so far.
Hey traders, would you like some help with technical analysis? Well, lucky for you, we're giving away a free technical analysis guide. That's right, completely free. It's an entire guide all around technical analysis. The guide includes subjects like support and resistance trading, MACD indicators, trend lines, candlestick pattern trading, RSI indicators, and much more. So make sure to click the link in the description, fill out that information, and we'll email you a technical analysis guide right away.
All of our euro pairs are down except Euro JPY, which is actually up 0.31%. Euro CAD, on the other hand, down 0.43%. I can see right here as well. That's actually our biggest mover to the downside out of all of our currency pairs and indices and commodities for that matter. All of our pound pairs, same thing here. All our pound pairs are down on the day except pound JPY, up 0.36%. Pound CAD, on the other hand, down 0.37%. All of our yen pairs up on the day, CAD JPY being the biggest mover to the upside so far, up 0.8%. Euro JPY up 0.31%. Swiss franc pairs, pretty split, most of them moving to the downside. However, CHF JPY up 0.39%, CAD CHF down 0.1%. Lastly, our Australian dollar pairs and New Zealand dollar pairs, Aussie JPY up 0.57%, Euro AUD down 0.19%, and New Zealand NZD JPY up 0.66%, Euro NZD down 0.26%. Market heat map is a super useful tool for seeing how all of our assets are trending so far today. This is getting updated every 15 minutes, so as the market moves, so does the market heat map. I want to remind you that you can get the edge finder for yourself with the market heat map, our economic news tab, smart money tracker, which tracks COT data, retail sentiment, which tracks retail trader data, the Fed tracker, all of these fundamental data tabs here, and of course our watch list with our buy and sell biases at a discounted price. When you use code A1YT, you can find it in the links down in the description below if you want to get the edge finder for yourself. And again, use code A1YT for a discounted price at checkout. But let's go ahead and check out our buys and sells. I've already removed the neutral biases. I'm going to remove the indices and commodities as well because I want to focus on our currency pairs, and it looks like we have an even amount of buys and sells here, with one strong buy being NZD CAD, score of +6, and one strong sell being GBP NZD, score of -7. So GBP NZD and NZD CAD have kind of been running the show for the past week. Both our strongest buy and strongest sell has stayed pretty consistent throughout the week so far. Not a whole lot of US dollar pairs either. I took a look at USD ZAR in yesterday's video because I hadn't looked at a US dollar pair yet. This and AUD USD are our only two US dollar pairs that are either buys or sells. But we still have a decent amount of pairs to take a look at. However, I think I'm going to take a look at GBP NZD simply because I took a look at a buy yesterday, so it's time to look at a sell. GBP NZD is our strongest sell with a score of -7. I did look at this pair earlier in the week, but in case you've missed it or in case you want a refresher, we're going to go ahead and take a look at this again today because it is our strongest score in the Edge Finder as of right now. So let's take a look at GBP NZD right here. And like I mentioned, we have a strong sell bias score of -7. COT data comes out to a score of -2. And retail sentiment is a neutral or a 0 score. So let's take a look at those numbers right over here. COT data, of course, is institutional trader data. So for when it comes to the New Zealand dollar, 68.29% long, 31.71% short. So institutional traders favored long on the New Zealand dollar. The pound, on the other hand, 61.47% short and 38.53% long. So institutional traders just slightly favored short here on the pound, but we can see that they're definitely favored long here on the New Zealand dollar. Retail sentiment, on the other hand, it's pretty clear why we have a neutral or a 0 score here, because we have 51% long from retail traders and 49% short. So we are practically 50-50 here. It's clearly not leaning one way or another. You could try and make the argument that there's a slight favoritism towards the long side, but this is really just 50-50, and that's why we have that neutral score right here. Our seasonality is a score of +1. So historically speaking, when we take a look at our last 10-year average price points, how has this currency pair favored in the month of January over the last 10 years? Does it typically trend upwards or trend downwards in the month of January? Historically speaking, it typically trends upwards. It does not seem to be that does not seem to be the case so far this month and this year. But historically speaking, we can see that that typically is the case. Slight bullish momentum for GBP NZD in the month of January, historically speaking. Our trend reading, on the other hand, is a score of -2, and we can clearly see strong downward moves over the past couple days, the past week almost, just nothing but downward moves each day until it shot back up a little bit today. However, price forecast does predict, based on all of the other information here and how this pair has been trending, that this will continue to move down. And who knows, today is not over. This still could shoot back down even lower later on in the day. Fundamentals right here: GDP growth, inflation, unemployment, and interest rates, all scores of -1. And we can take a look at our fundamental data right here. UK GDP growth currently at -0.3% compared to New Zealand's 2%. The pound inflation 10.5% compared to New Zealand's 7.2%. UK unemployment 3.7% compared to New Zealand's 3.3%, and lastly, pound interest rates 3.5% compared to 4.25% for the New Zealand dollar. So any way you look at it, this is looking like a sell, especially fundamentally speaking, where the New Zealand dollar is beating out the pound in all four of these metrics here. Retail traders are 50-50 on the pair, but institutional traders are favored long on the New Zealand dollar and favored short on the pound. So I'll remind you one more time that if you want the Edge Finder for yourself and access to all of these amazing trading tools, you can find it in the link down in the description below and use code A1YT at checkout for a discount on the Edge Finder.
Now I'm going to pivot and take a look at some of the charts you guys have requested here. Let's start fresh in the euro dollar today, which continues to move higher. And I would say bullish until proven otherwise here. I think calling a top on this is a tough thing to do. I know someone in the chat said they were looking for sells. Not necessarily disagreeing with you, like maybe there's a sell coming. But to me, it's a tough game to play trying to call the top of a move like this, because the second you think that this top is in, guess what it does? It shoots right through the highs and the trend stays strong. What I personally look for if I'm going to be selling something like this is I need to see evidence that sellers are strong. Sellers are not strong yet. There's no evidence here based on the chart to show me that evidence is pointing, okay, this thing is sell heavy. Why? Well, look what's happening. At its simplest form, each time this thing dips, Buyers are ready to bid it higher. That's a bullish market. Now, if that shifts and we see buyers unable to support price, then you have my attention for possible sell side action. But where we currently sit, there's no evidence of selling. And again, you might say, well, I'm going to sell here and watch, Nick. You're going to see it's going to drop like crazy and I'm going to catch it before even the breakout. Now, I'm not necessarily trying to disrespect you by any means, but if that's your idea, if you're trying to call the market turn before the market actually turns, you must know something more than the rest of us. Because again, if you are calling a top here and you think you know the top, well, hey, you don't have the actual funds, the leverage, the ginormous pockets that institutional traders have to actually turn a market, right? I don't either. So the thing is, we are waiting for the market to show evidence, and I don't need to be the first one to call the top. I just need to join the move once the move's begun. Hopefully that makes sense, but that's kind of where I'm at with that. So let's continue on. So euro dollar, again, looks bullish until proven otherwise. I wouldn't necessarily be looking to get short. And so far this year has looked very strong for the euro. Again, not looking to get short until something shows to the contrary. And hey, I'll continue that thought process with gold. Gold, very similar story here. Gold looks strong. And each time this thing dips, let's look at the evidence. Each time this thing dips, buyers are ready and able to hold price and to push it through the highs yet again. At its simplest form, understanding what price action is telling us is just showing there are more buyers in this market than there are sellers. When that changes, we might change our tune too. But for now, markets are showing bullishness. We are looking primarily for bullish setups. If that makes sense, do me a favor and type yes in the chat. That would be very helpful. If you guys could just let me know right now, type yes in the chat. Hit the thumbs up button on the stream, do all the YouTube stuff. Just give me some feedback that what I'm saying is actually resonating, that it's making sense. When I talk about reversals to me are waiting for the market to truly show signs of reversals rather than trying to make a gut call that, hey, this is the top is in, right? There's no evidence of that yet for me and the way I trade. So type yes in the chat if that makes sense. Markets have been garbage the whole week, says PJ Plays Games. Man, perhaps for yourself and maybe some other people are feeling the same way, but this week has been very, very good for trend followers, myself. Not every week is this good, but of course, this week has been phenomenal for the action inside of our group. So yes, cool. You guys are saying yes in the chat. Thank you for that. We're streaming on 2 channels, by the way, A1 Trading and on my own channel, TraderNick. Shout out to people on both channels. Thank you guys for hanging out. Make sure to subscribe. And if you're not subscribed to the other, you can check them out. So if you're on A1 Trading, go to TraderNick. If you're on TraderNick, go to A1 Trading. There's great content on both and an awesome team of people behind each one of them. So let's press on. So what's the thought process with gold? Are we bullish? Are we bearish? Let me know, guys. What do you think? Are you bullish in the chat? Bearish on gold? What do you guys think about gold? And as you're answering, I'm going to share a little bit of my take. So like I said, bullish until proven otherwise. If markets break the other direction, we'll reevaluate. But if I'm looking at the edge finder here, something to think about is if we go to the smart money tracker, look at the smart money tracker, take a look at gold here today, and it shows some interesting information. When looking at the assets that institutional traders are most heavily long or short on, again, most bearish or most bullish on, we can see that gold is second only to oil in terms of assets that institutional traders are net long on. We're looking at the non-commercial COT data pulled in from the A1 Edge Finder, which is our market scanning software built by my company, A1 Trading. And we're looking at gold specifically, and we're saying, okay, hey, look, gold is one of their most heavily accumulated assets. And when we know that, especially with this number increasing in recent months, at one point, a couple months back, it was like 60%. Now it's up to 72.5%. Gold is being picked up by institutional traders, and they continue to be long as of the most recent filing here with the COT data. That information is very important to us when looking at the price of gold and saying, okay, well, no wonder this thing is getting dips bought. Now, does that mean that the next dip is guaranteed to get bought? No. But probabilities are everything. And this is what I try to talk to people all the time about when it comes to trading. It's not about certainties, it's about probabilities. So if price pulls back to this trend line and you're able to spot some support in this area and you take a trade, you're accepting, hey, I could be wrong. I'm going to stop out if I need to, But I could also just be in the probabilities and run with the institutional traders that are net long on gold, and I could probably make some money here, right? That's the way of thinking that we try and sort of talk about here on the stream consistently, is thinking probabilistically, not thinking with certainties. Newbie traders, people who lose money consistently at this, they are overconfident and certain that what they're doing is going to make money. Professional traders understand that no matter how strongly you feel, you can be wrong, and that's okay, because we try and minimize the damage done when we're wrong. We try and maximize the possibilities when we're correct. So if I'm looking at gold here, my thought process would be, if you're looking at this trend line, there could be some pullback opportunities. We clearly had some pretty strong support in this area. So if you get some pullback here and we line up with this trend line, get a nice upward trend, dips being bought, everything sort of stacks up. Institutional traders are long. There may be something here to get long off of and make some money on the long side. Now, of course, we are accepting that that's a probability-based decision. We understand also that, for me, if stops were to go under here, this would show us if this market breaks through the lows, I'm out of there. Keep it so simple. Is this retail price action study? Yes. Is that necessarily bad? No. So many people are so interested in tracking liquidity, all this and that. And you know, I've been trading for a number of years. I put out my track records. I've been profitable for the last several years. And I'm not saying that to brag. I'm telling you that some of the simplest stuff can work just fine. People overcomplicate the crap out of this stuff. Keep it simple and understand what market structure is telling you. Price pulling back into this area should be respected. And if it's not, where's the invalidator? Where do we say, hey, this is probably no longer valid? Well, probably a break of structure, which would look like this, right? So all based on probabilities, no gambling mentalities, no certainties, all just weighing the odds, trying to make educated decisions. And even if you just had a 55% of the time where you're right, you can make money in this stuff long term. It's just going to have swings in between.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the Edge Finder, you can find that in the description as well. Thanks for watching.